These days, it seems like everyone wants your money, and we're not just talking about bill collectors. In the aftermath of swan dives in both the housing and stock market, individuals are questioning their ability to manage their money on their own. That spells market opportunity. So banks, insurance companies, and brokerage firms are lining up to advise our personal finances for a small fee, of course. But in wake of the economic and market turbulence, it's smart to be skeptical. Here with 4 questions to help you find a solid financial advisor is Manisha Thakor, personal finance expert and author of Get Financially Naked. Hello, Manisha. So nice to see you again.
Hi, Meg. Thanks for having me.
So you've got some questions people should ask before hiring a financial advisor. And the first one is, how do you get paid?
So, Meg, this is the money shot question. And if you ask this of an advisor and they hem or they haw or they won't look you right in the eye, that is a sign to run, not walk away. And there are 3 basic ways to get paid. An advisor can get paid on commissions. An advisor can get paid based as a % of the assets that they are managing for you, or they can get paid on an hourly fee basis.
Okay, so now which one out of all those 3 do you recommend?
So I prefer B or C. I really like the % of assets under management or the hourly fee-based scenario because they align the advisor's incentives with your incentives. The kicker here, however, is advisors that work on a % of assets under management frequently have a minimum level of assets that you have to have. So if they're charging 1%, they might say, I need you to have at least $1 million because that's $10,000 a year. And if I'm going to do a lot of work with you, I need to get paid. So if you're just starting out, my suggestion is to look at the hourly fee-based planner who will charge you just like a shrink will or a trainer at the gym.
It's all the same, right? Okay, now you also say
exactly.
We should ask, what credentials do you have and how long have you been in the business? These are important, right?
They really are, Meg, because pretty much anybody can put up a shingle and say, I'm a financial advisor. And so the designations that I suggest people look for are either the CFP, which stands for Certified Financial Planner. It's a wonderful designation, rigorous course of study. I also love CPAs who have earned the PFS designation, which stands for Personal Financial Specialist. And then another one is the CFA, Chartered Financial Analyst. All of those show somebody's gone through a lot of effort to learn to advise you.
Because Manisha, I imagine we're seeing a lot of people, as you mentioned, hanging out those shingles because everybody's been out of work and they're looking for ways to bring in income.
Precisely, and that's why you want to ask that follow-up question, how long have you been in the business? And you know, I used to say I like to see people who've seen a market cycle, a good 5 to 7 years at least, so that they've seen ups and downs. Now I'm seeing many very qualified people do industry or do shifts. So they may have been a portfolio manager and now they're a financial advisor, but they've been in the industry a long time. So I'm now a little more focused on how long you've been involved in financial services as opposed to specifically just advising clients.
All right. Now, the third thing we need to know is how often we'll be meeting with the advisor.
So, Meg, this is huge. It's not a one and done when you go meet with a financial advisor. And if you come across someone who tells you anything less than once or twice a year, then that's a sign that you do not want to be working with this individual. I personally recommend twice a year because life these days moves so fast. People get sick, you lose jobs, you move, benefits change. So I think you really need that ongoing dialogue to make the most of your relationship with your advisor.
Now, you said, at least 2 times a year, but if you could increase it, how many more times would you like to see somebody meet with them?
So I personally think 2 is optimal.
Okay.
If you're in the early stages, maybe once a quarter for the first year or 2, and then once you've established that relationship, twice a year ongoing from that point.
All right, and how much do these meetings usually cost if you go with the hourly rate?
So an hourly planner could charge anywhere from $150 to $250 is kind of the average range. And I would say, 1 to 3 hours would be a typical length of a meeting. And if you think about that cost over the course of a year, and if they help you make some smart asset allocation decisions or make sure that you've got the right insurance in place, that can pay itself off many times over.
Okay, and finally, we should ask to talk to existing clients as well as people who are no longer clients, correct?
Exactly. And this one is really important because you worked hard for your money. And so sometimes people feel a little awkward about saying to their advisor, I'm shopping around for an advisor. And I want to say, please feel very confident in doing that. I recommend that you interview at least 2 or 3 advisors before selecting one, because you want to make sure that you've got a good personality match as well as a credential and experience match.
Oh, that's interesting that you brought up the personality too, because if you can't sit with this person for up to 3 hours, it might not work out so well.
Well, and also, Meg, if you don't feel comfortable getting literally financially naked, I like to say we all have 2 bios. Our glossy bio, you know, the one we put in front of someone when we're introducing ourselves, and then the real muck that's going on in our life. And your advisor needs to know the real muck to be able to truly help you. So you want to feel comfortable talking to them.
All right.